Hello, everybody, and welcome to the Energy and Industrial Share Conference. I'm Magnus Watson, the co-founder of Stock Perks, a very cool app where we're working with companies to offer you, the retail investor, perks for holding shares. And right now I'm speaking to Delek, actually one of the companies that does offer perks to retail investors. I'm thrilled to be back, actually, speaking with Uzi Yemin, the CEO of Delek US, and Blake Fernandez, the IRO for Delek US. Just a friendly reminder to everyone out there that you can ask questions in the text box to the right of the screen. Gentlemen, we spoke last summer, and it is so absolutely wonderful to see you both again. I'd love to start off by having you update us on what Delek has been busy doing over the last 6 months.
Well, hello, Agnes, and again, thank you for hosting us. It is always a pleasure to talk to you and to talk to the investors. We consider retail investors very important component of our investor team, and we thank you for giving us this platform. So Delek has been busy over the last few months. We created a platform that we believe once the recovery is coming, and we think that it's on its way, to enjoy in different places from our asset base. Let me just remind everybody that we do have 4 refineries, that all run light sweet barrels, local barrels, which we believe with the price of crude going up, that the drilling will continue, and we will start seeing some differentials opening up over the next 2-3 years. We also have the logistics arm, DKL, which is performing very well. It's the best MLP, I think, by return, right, Blake?
It's definitely top tier. Yep.
Top tier, maybe top 5 in the last 3, 4, 5 years. We still pay between 8 and 9% yield, which is very good for investors. We have our retail arm, which is doing very well. It has the best year ever this year. So we feel good where we're positioned.
Fantastic. Can you tell me a little bit more about the Delek portfolio?
As I mentioned, we do have 4 refineries, one in El Dorado, the other one in Big Spring, the third one in Cross, and the last one is in Tyler, Texas. These refineries run at Blake, third quarter was what? Above 90% utilization.
Yeah.
And also we have the logistics arm, which is a public company. The ticker is DKL. And then we have the gas stations or the convenience stores, a little less than 300 stores that we operate ourselves, and few hundreds more that we supply.
Where are most of your retail production? Is it mainly in your native Nashville, yes?
No, most of it is in West Texas and New Mexico. It's being supplied by the Big Spring refinery. Thanks for the question. Also, if you will, we do have 3 biodiesel plants that we're producing biodiesel that's supporting our environmental or ESG initiatives. And we have an option to be part of a renewable diesel project, 33%, which we may elect to exercise. We'll see how it plays out. Anything else, Blake, you think I'm missing?
No, I think we'll talk about it a little bit more later, but one element of DKL is the Big Spring gathering business, where we're basically gathering Permian-based crude, and that's really one of the key growth areas I think we see going forward, just given the drilling activity and the elevated crude prices. So
yeah, when we talk about the outlook, we'll mention that. But go ahead, Agnes.
Yeah, no, I know you mentioned ESG. Now, do you want to talk a little bit more about climate change and how ESG is becoming more and more important in traditional energy refining companies?
Absolutely. Global warming is here. We can argue, we can say no, but it is here. And Delek wants to play a big part in it. What we do, we put our sustainability report. It got a lot of traction. We said to ourselves that we were going to reduce our type 1 and 2 emission by 34% by 2030. We're, I think, one of the only small mid-cap refineries that put that in front of investors, and we're very proud of that. We're looking at several projects, including chemicals, joint ventures, and other things that will reduce our emission to the atmosphere. At the same time, our objective is to be operational excellence, and that by itself will reduce the emission that our refineries put into the atmosphere.
I'm a big alternative energy, green energy, environment supportive person, so I love hearing that. I'd love to hear a little bit more about the opportunities for Delek as you transition to maybe green energy.
Well, what we're doing right now, green energy is something that people say, we really don't know what the energy transformation is. We do know that we can be involved in renewable diesel, biodiesel plants, we can be involved in chemicals, we can be involved in maybe in the future renewable power, all these things. But we're probably at the stage that it's wide open, and we really don't know as an industry, not Delek, where we should go. So we are in a phase of doing the research. We're looking at things very carefully, and to make sure that we utilize our free cash flow toward areas that will be much more sustainable than just refining.
That makes me very excited. Let's talk a little bit about demand. I know when we spoke in the summer, we spoke about COVID and how different the environment had been, and now we have Omicron. I'd love to talk about the demand trends as the economy starts hopefully to reopening and then closing and reopening again. And do you see Omicron as a potential risk?
I'm not smart enough to honestly to voice an opinion about any type of virus or pandemic. I just don't know. I do think, though, that people are tired of sitting at home. I think employers are tired of employees not collaborating and not engaged. So I think employers will start bringing people back in. I think that the vaccines are doing their job for the most part. So I think that 2022 will be an awesome year from demand standpoint. We see air traffic is growing. We see people driving here in Nashville. We're back to all these rush hour traffics, and we see the demand around the United States. It is 15-20%, like 15% above last year, and I believe that we will get to the pre-pandemic demand situation sometimes next year, and even maybe exceed that, and we'll get all-time high. All these car sales, everybody is bragging about car sales, about demand in many areas. So I do believe that there's an awesome year ahead of us. On top of that, we have the drilling in, like Blake mentioned, the drilling in West Texas that may be beneficial to us in the next 2-3 years.
Agnes, I was just going to give you one point of reference. It's just kind of interesting. We've done all these conferences virtual for, the past 2 years or so. Uzi and I are actually in the first quarter of next year already scheduled to be at, I think it's 3 different in-person conferences. So it's a good indication of demand getting back to normal and, people getting back to some type of normalcy.
Yeah, I think us as humans are very social creatures. We need interaction. We need something a little bit more than this. There's only so much of being distant from each other that we can handle. So I'm so happy you guys are doing in-person conferences. I cannot wait. I have a question around your earnings during the pandemic. It was a different environment. So you guys had some negative earnings and some not the greatest EBITDA. How does the environment look today, and how's it going to look going forward? I know, Uzi, you mentioned that you're expecting travel to be great, but I'd love to hear a little bit about your financials.
Absolutely. Blake and I spoke about this morning, saying that crack spread, or the spread that we're making money off, we are in $16, $17 now. Obviously, we have the RINs, but if you reduce that, we're still at $10, $11, which that's fourth quarter. It has been a long time since we saw these numbers. We put decent numbers for the third quarter. We're hoping to put decent numbers for the fourth quarter. And then we think that we are positioned to start benefiting from the high crack spreads, as well as hopefully bear differentials in the future because of the drilling. So we will be back on the hunt for growth.
You know, Agnes, just for those that aren't as familiar with the refining business, usually a lot of the money is made in 2Q and 3Q. So 4Q, as Uzi was saying, is usually kind of a difficult period, and we're seeing abnormally strong margins for this time of year. So it's really giving us some optimism as we head into 2022.
It's fantastic to hear, and I'm glad you guys are, telling retail investors about the future of the financials going forward. Growth. There's some questions and some discussions always about where companies grow. Are there any specific areas of growth where you see opportunity for Delek US?
First, you mentioned renewables. You did mention that.
I did.
And you were right. You were spot on. Second, the midstream assets are both organic and inorganic areas that we need to pay attention to. And of course, retail, building these NTIs and building a network that is more innovative, using digitization and better customer experience. So these are the areas. Vis-a-vis refineries, we need to continue to look at the energy transition and ask ourselves if we want to continue to buy refineries. Right now, we are on the fence. But as cash flow comes in, these are the focus areas: renewables, midstream, and retail. Anything you want to add?
No, the only other thing within that logistics arm, like we said, there's really some strong demand in Permian drilling, and we do have that gathering business there. So I do think that's going to be an area where we have the potential for some organic expansion in addition to potential M&A. So,
oh, fantastic! I'm an ex-M&A banker. I always get excited about M&A for small to mid caps. As we've mentioned, the environment is improving. You guys are seeing better results. Should investors be expecting any dividends or buybacks going forward?
That's a great question again. What we want to do first is to make sure that the balance sheet is ready for growth if we decide to do so. At the same time, I think that energy in general, the investors should expect and deserve some kind of return. So as we go back to profitability, we'll look very carefully at both buyback and dividend while shoring up the balance sheet and ready for growth.
Fantastic. There's one question coming in. I know you've mentioned DKL. Can you tell me a little bit more about the relationship between Delek and your MLP DKL?
Well, DK owns 80% of DKL. And this is something that we are being asked by many investors. Probably your investors will ask the same thing. If you look at the valuation, the sum of the parts, you see that DKL is around what, $2 billion company now. If we own 80%, which we do, if we take the 80% that we own times the $2 billion, that's what the $1.6 billion. The market cap of DK is 1.3. So you say to yourself, how can it be you get refineries and retail? Now, there's some debt of what, $500 million. But if you take that 500, you get refining, 4 refineries, and a chain of retail, which produces, call it $50 million of EBITDA for $500 million, which is almost unheard of. So people ask us that question. We believe that this will change as we go back to profitability and going back to giving money to shareholders.
I think it's important for people to realize the relationship and your ownership of DKL, because so many retail investors won't know about it and don't know about it. So it's really, really critical for you to tell them and make people aware of it. Because sometimes when you make your investment, you don't look at the entire picture, and this is quite critical to it.
That is correct. Go ahead.
I think, Agnes, one of the things we're looking at strategically is an opportunity to expand DKL. Most of the assets comprised in the portfolio today are really reliant upon the sponsor, DK, as the parent. So they fund the revenue, but we're looking for third-party options to diversify. And I think as that happens and it becomes more diversified and not so reliant upon Delek, to fund the EBITDA, I think that is going to be an uplift to the potential for DKL as well. So we're pretty optimistic about that into the future.
That's fantastic. Do you have any timeframes on that, or it's just out in the future sometime?
Well, I think, we mentioned the opportunity to expand in the Permian. I think those assets are now housed at DKL. So to the extent we can actually start contracting some new deals, I think we're going to try and do that to the extent possible, where DKL has a direct relationship with the E&P producers. So that's one option that'll be expanding into next year. And then any M&A would certainly be a step change immediately. So I don't want to give you a hard timeline, but that's something we're looking at closely. So.
That's perfect. Thank you so much. Guys, I know we're coming close to the end of our session. Are there any kind of other closing remarks that you want to take to not only your current investors, but any potential investors? This is an energy conference, so quite a lot of the people that are joining in are people that are interested in, maybe I should invest in this sector, maybe now is the right time. And if so, what makes one company more attractive than another? Which one should I be excited about? Any kind of closing remarks to the potential investors that are out there that are thinking, should I invest in the energy sector? If so, which company and why?
Well, we energy in general got hit hard during the pandemic. We're coming out of the pandemic in one way or another. I don't believe that people can stay home for much longer. I just don't believe that. So people will start coming out, demand will improve. We already see signs of that. We see it in our stores. We see it in our refineries. Utilization is very high for fourth quarter as an industry around the world. People shut down refineries and shut down pipelines. So there will be demand for these assets. For Delek specifically, we're in the heart of the Permian. The Permian is coming back. We see the drills are coming back. That by definition will increase or will open the differentials, not tomorrow morning, not in a month, but in a couple of years, 3 years. And because of the lack of building infrastructure, they are forced to stay there for a while in our mind. That together with our operational excellence and grabbing the operation by the horn and making sure that we don't leave any money on the table should give a great future for Delek that will lead to bear both share price as well as return cash to shareholders. So in general, I think that's the time to invest in energy. In 10 years, when people say, "Hey, I invested in energy 10 years ago," people would say to him, "Hey, how did you know that?" Of course, energy transition is another component that we will look at. And so I think that times will be awesome over the next few years.
Fantastic. Uzi Blake, I really want to thank you for your time today. I think I mentioned at the beginning, I really believe giving access to senior management is really, really important for all investors. Traditionally, it's been reserved for institutions, and institutions had the privilege of hearing your story and asking you questions and making their investment decision based on what you say. And I think it's so important for retail investors to have access to senior management and to hear your story directly from you and make their investment decisions incorporating all the information out there. So I really value your time, and I really want to say thank you for coming out there and telling your story and getting people excited about what Delek is doing. So thank you. Everyone else?
Thank you. Thank you so much. Thanks for hosting us. As usual, it is a pleasure and a fun exercise. Thank you.
I'm looking forward to keeping tabs on you guys. I am really excited and interested about where you're going and what you're going to be doing next.
Thank you.
Great.
Thank you so much.
Everyone else, thank you for joining the session. Next up, we have Duke Energy. Please click on the right corner and watch the presentation from Duke. Thank you very much.